We're keeping you informed on a proposal that would impact homeowners across the state.
Well, that's where it's at right now, a conversation. And
as home prices keep soaring, Governor Ron DeSantis is proposing a plan to ease the financial strain on homeowners.
We need to crack down on property taxes in this state.
Thanks, Lisa. Well, the idea of getting rid of taxes always sounds like a great idea, but it would not be an easy thing to do.
No property taxes. I mean, how cool would that be? Or would it? To get it done here in Florida, it's going to take a change to the Constitution. That takes a vote. I'm going to give you some pros and cons of eliminating property taxes. You decide if it's a good thing or if it's going to be a debacle. But first, a commercial. In case you haven't been to our channel before, my name is Mike LaVoy. I am a broker associate with Dalton Wade Real Estate here in the Tampa Bay area. My goal here is to give you as much information as I can possibly do on what it's like to live in Florida, over here on the West Coast in particular. If you're interested in relocating to the Bay Area, well, you're in luck. I am a licensed realtor. Give me a call, send me a text, shoot me an email. My contact information is down below. First thing I want to do is define property taxes. I mean, it sounds pretty straightforward. Property taxes are levied on real property, real estate, in every county in the country. Contrary to what some people think, they are billed and collected by the individual counties, not by the state. There are two types of property taxes. You got ad valorem, which is, according to Webster's Dictionary, means a percent of value. That tax due is calculated as a percentage of the property's value. And then, of course, you may have guessed we've got non-ad valorem taxes. I'm going to start with a non-ad valorem first. They are not really a tax, it's a fee. Non-ad valorem taxes pay for services the county provides through a third party, like maybe a garbage collection, stormwater utilities, security, fire and rescue. The county or whatever authority calculates the next year's upcoming expenses for these types of services, divides that number by the number of households in the district, and there you have it, your fee. Ad valorem taxes are calculated as a percentage of the property's value using a millage rate. Every taxing authority out there, you got the schools, the parks, recreation, the county itself. I mean, someone has to pay the county employees. They all develop their own millage rate. Those millage rates are used to calculate taxes based on the assessed value of the property, randomized onto a billing statement, and sent out to the property owner each fall. In November, the property owner has until March 31st of the following year to pay those taxes. If the property owner decides not to pay, the county can wind up taking the property. Last year, Florida residents paid about $43 billion with a B dollars in property taxes, and that seems like a lot. But across the country, it's pretty much right in the middle of what's out there. This chart from Newsweek shows the effective property tax rates for each state. The darker the color, the higher the property tax rate. The average tax rate is 1.12%. So Illinois sticks out like a sore thumb and is the winner at 1.88%, followed closely by New Jersey at 1.64%. Surprisingly enough, the great state of California is only 0.7. I mean, I would have bet the house that rate would have been a lot higher. Florida's rate is just a tad higher than that at 0.76%. The idea of eliminating property taxes in Florida is not a new concept. It's been brought up several times over the years and has been basically a non-starter. Depending on who you talk to, it's either something that is way long overdue or it's going to be the end of the world. On the one side, property owners are all over it. I am a property owner, but then really, am I? I mean, once the property's paid off, do you really own the property? Representative Webster Barnaby out of DeLand summed up the issue of the ownership fairly well when he said, "This is about fundamental fairness to Florida taxpayers. Do you own your house? That's the question. I want to know that every Floridian who has finished paying off their mortgage owns their house." When you think about it, a property owner like myself never actually owns the house. Sure, the mortgage is paid off after 30 years, but if I don't pay that annual property tax, my house could be put up for foreclosure and taken away. Basically, a property owner is paying rent to the government for the privilege of living in that house that they've been making payments on. Paul and I are paying about $9,000 a year in property taxes. Let's assume I live in it for 30 years. That's $270,000, not including inflation, just to live there. Unless my property goes down in value or the county lowers the millage rate, which is not likely to happen, that $9,000 a year is not going to go down. And I could think of a lot of things I could do to improve the property with that amount of money. So what happens if property taxes are eliminated? Nobody really knows. It's never been done before in any state. That means anybody who gives an opinion, including myself, are guessing. Here's my take, though. If property taxes are eliminated, there will be no money to pay for the fire department, the police department, schools, and county employees. I believe the mayor and all the city employees are going to want to continue to get a paycheck. How is that loss of revenue? It's $43 billion. Where is that going to be coming from? One option is to reduce services and or cut payroll. Could happen, but probably isn't gonna. Another and more likely option will be to increase state sales tax. Right now, the average sales tax in Florida is 7.02%. It's pretty moderate compared to other states. There are studies out there talking about that increase. Their estimate is that the average sales taxes that are going to need to be collected to make up that $43 billion in difference is about $2,000 a year from everybody in the state. The argument with that is that lower and moderate income residents would be hit hardest, and that's probably correct to a point. Lower to moderate income people tend to spend less money. Not many are out there buying a yacht or a Lamborghini. One thing I like about higher sales tax is that I have a choice. If I go out and buy that Lambo, which is not likely to happen, I choose to pay the higher tax. Property taxes, you just don't have a choice. Are they going to pay more at Publix? Of course, but it's their choice. Not to mention that the $2,000 need to be collected is going to be a lot less than the current property taxes they're paying. Look, people work their entire lives somewhere up north, retired, moved to Florida, paid cash for a home with the intent of living there for the rest of their natural-born days. The moment they took that pension, they went on a fixed income. Other than Social Security, that pension is not normally adjusted for inflation. Those people who retired here to live on a moderate life are in a low to moderate income for life. Inflation has eaten into that buying power that they once had. That home they bought years ago has appreciated. Taxes have gone up with it as well. A lot. Now those same retirees are forced to make a decision between buying their prescription drugs or paying their income taxes. It's a sad thing that's come to happen, but that's where we are with a lot of people. The other thing is, what about people who don't have a home, don't own a home? Renters. They're going to be affected as well, and they're probably going to get hit the most. Rent is high in the Tampa area, and there's no other way to put it. Rent is high across most of the country. Landlords, they're paying property taxes, and unlike homeowners in Florida who enjoy caps on their property tax increases, investment property owners have no limit. They have gotten hit with some huge increases in property taxes over the last few years. Those taxes, along with insurance, upkeep, and everything else, are getting passed on to the renters.
The exemption could be extended and enhanced to bring relief to both renters and new homeowners.
What you could do, and it's probably the most unpopular thing, for those who don't yet homestead, is to put a cap on that as well. But you'd have to change the constitutional amendment.
One would think that if the landlord is no longer paying those taxes, they would be able to lower the rent proportionally. I would hope there would be some sort of legislation that would require landlords to offset rents. However, you know how it works.
Mike Fasano says if you give this homestead tax break to park owners, commercial property owners, and corporations, there's no guarantee they're going to pass the savings down to you.
Although I am personally for it, I don't believe property taxes will be eliminated completely in Florida. There's just too many variables involved to make it work right. I do think that an increase in the Save Our Home limit has a much better chance of passing through making a change of the Constitution. The Save Our Home Act was passed in 1992. It went into effect in 95. One of the benefits of the act is limiting increases on property values to 3% a year. Qualifying for this benefit requires the homeowner to apply online, stating that the home is their primary residence and they are residents of Florida. Sorry, you can't live in New York in the condo and then have a condo in Miami and claim a homestead exemption here in Florida. That online certification is a one-time thing, and it is portable if you buy another home and move. Another benefit is the $50,000 exemption. Not going into a whole lot of detail, if you file for a homestead exemption, $50,000 is subtracted from your home's assessed value for tax calculation purposes. Cool, right? And I own a home. It's assessed at about $500,000. With my homestead exemption, the taxable value is $450,000. Great, or not. That $50,000 was set up in 1992. Obviously, inflation had reduced the effect of that amount a lot. During the last election cycle, an inflation rider was added to the Constitution. Going forward, it doesn't do anything for the last 30 years. An easy fix would be to increase the exemption amount to maybe $100,000. That bill has been introduced and could be on the ballot in 2026. Home affordability has been an issue for most larger metropolitan areas across the country. Between insurance rates and taxes, affordability will continue to be an issue, irrespective of whatever rates are doing. Any reduction in property taxes has to help affordability at all economic levels. I'm all favor for eliminating property taxes, but
it sounds great up front, but there's always and what? Like at what cost?
Yeah, you heard that right.
if you have thoughts on this, I'd like to hear them. Jot them down in the comment section. Have you subscribed yet? What are you waiting for? See you next time.